Before you buy that townhome, you need to understand what condo fees actually cover, and more importantly, what they don't. I've had buyers walk into a deal thinking $200 a month means everything's taken care of, and then get surprised 6 months later with a special assessment of $3,000 for a new roof. So today, in order to avoid that potential surprise, I'm breaking down exactly what you're paying for, and more importantly, what you're not. We also will look at how to protect yourself when purchasing a condo or townhouse. My name is Murray, and if you'd like a personal consultation on how condo fees can impact you on your new home purchase, message me directly. And if you find this video helpful, remember to subscribe to help others find this one too. So let's dive into things a little further. If you're a first-time buyer looking at townhomes in Stony Plain, Spruce Grove, or West Edmonton, the price point really does make sense compared to a single-family home. So this video is really designed for you. Because the purchase price isn't the whole story. The condo fee and what's behind it matters just as much. First, let's look at what a condo is in relation to a single-family home. Think of it as owning one unit of a building and sharing the costs amongst the other owners. You also want to think of it as if you're buying into a business too, because you want to know how financially healthy the business is and how it's being operated. Also, a condo that is 3 to 5 years old will at least have some financial information compared to a brand new condo. Again, think of it from buying a business perspective. Would you be more comfortable buying a business that has an established 10-year history with 10 years of financial background, or one that's only been open for 6 months? Definitely it's one with the longer history. So let's dive into these fees a little tighter. The key here is that, first and foremost, they are not optional and they're not negotiable. They're set by the Condo Corporation Board based on an annual budget, and every unit owner pays their share based upon a unit factor assigned to the unit. That's a percentage tied to your unit size relative to the whole complex, and it's outlined in the condominium plan. That fee typically covers the building insurance in case of a fire, exterior maintenance, so we're looking at the roof, the siding, and windows, common area for the landscaping and snow, reserve fund contribution, which is the savings account we're going to talk about a little further. And sometimes it'll include maybe the water, some utilities, but generally that's only if it's an apartment style condo. But a townhouse, you're responsible for the utilities, so it's always important to check exactly what's covered. Here's where people also get caught, and this is the key, is not knowing what condo fees almost never cover, and that's your own contents. So you need to have your own personal insurance. You'll still need a separate policy in case of a fire or damages to your belongings and to your interior finishes. You're also responsible for your interior repairs for appliances as well too. Special assessments. Now this is the big one. Special assessments are anything that's going to be covered that there's not enough money in that reserve fund. So if there's one thing that you walk away from this video knowing, it's this. Before you buy any condo or townhome, you're entitled to review all the condo docs, such as the AGM, monthly meeting minutes, financial summaries, and the key one, the reserve fund study. This is something that becomes part of your conditions on the purchase contract, along with the financing condition and a property inspection. This should not be an optional condition. It needs to be a requirement and can be the single most important piece of due diligence in a condo purchase that you'd have. The reason is this. The reserve fund study tells you whether the corporation has actually been saving enough money for the big ticket items such as the roofs, the siding, the parking lot, resurfacings of the parking lot, boilers, anything along that line. If the reserve fund is underfunded, that's a massive red flag because it means a special assessment is coming. I've seen special assessments in this area range from a few $100s to over tens of thousands of dollars per unit. A special assessment is what happens when the condo corporation needs money for a repair that the reserve fund, the savings account, can't cover. It gets split across all owners based on the unit factor, and depending on the bylaws, you might get only 30 days to pay it, or it gets added to your fees over time. This is why I always tell buyers, a low condo fee is not automatically a good sign. Sometimes it means the board is underfunding the reserve to keep monthly fees attractive, and that bill comes due eventually, often right after you buy in. When we write an offer on a condo or a townhome, here's what I make sure we get as conditions on the condo side of the equation. These are the documents. We're going to look at the information statement. It tells the current fees and any judicial matters going against that unit. The reserve fund study, know how much is saved and where this is tracking to. copy of the condo board minutes meetings. Now, this over the last 12 to 14 months will tell you what's being discussed and what's happening within the condo project. Bylaws and rules, important because it's also going to let you know about restrictions for pets or anything along that line. We're going to look at a copy of the condo corp insurance. We're going to look at the property management agreement as well too. It's also best to have a third party that specializes in condo document review to assess them for you. The cost they charge is worth it because they know what to look for and how to gauge the performance and management of the condo corporations. More importantly, when they look at the numbers, they will know if a special assessment is on the horizon, allowing you to make an informed decision on moving forward with your purchase. Also to note, not all condo corporations are the same, and honestly, the board makes a huge difference, and more so than people really expect. A well-run board keeps the reserve fund healthy, holds regular meetings, gets professional reserve fund studies done, and communicates clearly with the owners. A poorly run one undercollects fees to keep them attractive, defers maintenance, and then hits owners with surprise costs. Reading the meeting minutes is how you can tell the difference before you're the one that's stuck holding the bill. Townhomes and condos can be a fantastic entry point into home ownership, whether you're here in Stony Plain, Spruce Grove, or West Edmonton, but you have to go in with your eyes open. Condo fees aren't a mystery tax. They're a budget line you're entitled to fully understand before you commit. If you're looking at a townhome purchase and want a second set of eyes on the condo documents before you waive conditions, that's exactly what I help buyers with. Reach out to me directly for a direct consultation, and let's make sure that you know exactly what you're buying into with your new home purchase. I hope you have found this video informative. Remember to subscribe for videos on real estate and mortgage financing as this channel progresses. Cheers.